In this video, we discuss what not to do before buying a home and what to avoid. All that and way more. Stay tuned because we're starting right now.
Listen, I'm in the people business. I just happen to help them sell and buy amazing properties. I've dedicated my life to making your real estate dreams a reality. I bring the very best marketing and industry strategies to help achieve the goals of my clients, friends, and family. Welcome to the channel.
Hey YouTube, first up, if you're a first-time or even experienced buyer and want to see a quick step-by-step video on the home buying process, stick to the end of this video and I'll show you where you can find that for free. Take two. Hey YouTube, we're in a very highly competitive real estate housing market. You buyers need the absolute best strategy to get the home you want and need. These are a few basic and simple best practices you should be following when searching for a home and especially when you're applying for a pre-approval. These tips and best practices will put you on the correct path to reach your real estate goals. When you know what to expect, you can more easily avoid the typical home buying mistakes and pitfalls. These will give you the best possible aim at getting into your dream home. Mistakes big and small can cost you when you're trying to purchase a property. When you're preparing to shop for a mortgage and buy a new home, it's always important to clean up your finances and bring your strongest case forward when it comes time to borrow. This just doesn't mean saving up a bunch of cash for closing costs and a down payment. There's much more to this. This means avoiding common money mistakes that can actually reduce your ability to borrow, or these mistakes can actually get you denied for a mortgage loan. Many buyers often become preoccupied with just saving for a down payment and beginning the home process. They forget about the important small details such as an inadequate credit score and not paying down your debt. It's important to keep an eye on all these details necessary that impact the mortgage process. It's common and easy for a home buyer to make these mistakes throughout this journey. I mean, this transaction is one of the most expensive engagements a person will have in their lifetime. When you're purchasing a home, there are multiple activities going on simultaneously, some of which include contract negotiations, home condition issues, appraisals, mortgage financing issues, and these all can cause distractions or perhaps cause errors in judgment, which then in turn lead to further ramifications. And if you want to learn more about if home prices are actually dropping in the market right now, click up here on the card. How can you set yourself up in the best light? What do you need to look out for? Here are some of the most common issues first-time home buyers often make, how to avoid them, and also why they're actually matter to you. Number one, don't finance a car or any big item before purchasing a home. This is definitely something you never want to do. That is, have a huge purchase on your credit just before applying or just before closing on a mortgage. Oftentimes, buyers will go out and purchase appliances, a new car, or even just furniture on credit just before their mortgage closes. These can just halt the entire process altogether. These are all a big no-no, and lenders do a final credit check just a few days before closing, and if they find new debts were added, it very well may jeopardize the entire loan. Now, it's not just adding new debt to the equation. The act of adding credit or taking out a larger loan impacts your debt to income ratio. If you fall over the threshold that many banks have, this very well may knock you out of contention. Number two, do not max out your credit card debt. This is perhaps one of the worst things that you can do before closing on a home loan. Any extra debt payment amount will offset your income and result in actually qualifying for much less. This in turn lowers your credit score, which would then actually increase the cost of your loan to you. To the current credit scoring system, the actual debt amount really doesn't matter. What matters to them much more is how much credit you have that is relative to your actual credit limits. Now, to qualify for the best mortgage rates and also in the interest of actually keeping your debt under a safe threshold, try to maintain your credit utilization below 30% of your actual maximum credit limit. Doing so will actually reduce your debts and you'll be qualified for the best possible home mortgage and improve your credit score. Hey, what's going on? My name is Vasilios. Welcome to the channel. If this is your first time here and you want to get the latest actionable tips from a local realtor that actually save you time, save you money, and result in a smooth real estate deal, start now by subscribing and clicking the bell so you don't miss anything. And if you like the video, then, like that video. Now, back to it. Number three, don't quit your job or change careers before buying. Career changes quite often create issues with lending, especially if your pay structure changes. Say you were salaried in one career job and now you're commission-based. This will prompt your lender to check further back into your financial history. The lender therefore will need a longer track record and more documentation, especially when you enter into a commission-based career. Also, changing from a salary position to an hourly position can also create some issues with your mortgage lending. The typical variation in hourly's income quite simply comes from variations in hours worked, week to week. Lenders generally like to see consistent employment history of 2 or more years at the same employer and at least in the same line of work. As an example, if you work salary as a sales manager in one firm and you switch firms but you're still salary and a sales manager and in that same line of work, it may not set off any red flags. Number 4, don't always assume you need 20% down for your down payment. Many first-time home buyers generally assume they need 20% down to purchase a home. Now, there are many benefits for having a 20% down payment, such as elimination of private mortgage insurance, but for some, this may not be the best option. Now briefly, there are 0% loan types available, such as USDA loans and VA loans. You also have 3.5% down FHA loans and also options on the conventional mortgage side with 5 to 10% down. Now, if you do put less than 20% down, generally you will have to pay mortgage insurance. Number 5, not shopping for homes without getting a pre-approval. Before you begin your house hunting, it's very important to physically get a mortgage pre-approval in your hands. The biggest reason for this is that you're setting yourself up for disappointment. If you don't begin with this first and you find the perfect home, afterwards you try to get a pre-approval, before long that home will be gone, especially in this market today. Homes are selling super quick. That home most likely will be gone before the lender even finishes receiving paperwork, let alone beginning on your loan process. Also, there are sellers that will only show homes to folks with pre-approvals. These are all very compelling reasons to begin the process of looking at homes after you receive a pre-approval. Also, you really don't know how much home you can afford until the bank looks over your financials and tells you specifically a number. As we all know, the pre-approval process involves speaking with the lender. They'll check your income, assets, and your credit history and then verify all their supporting documents. And then they'll tell you a real price range. Number 6, don't go with the first lender or mortgage broker that you speak with. I know you're excited to buy a home and all you want to do is get through the process as quickly as possible. To apply to one mortgage lender and then get a pre-approval and then move forward immediately and start searching with your favorite realtor. This may be a huge mistake. Many lenders' rates can be very close in price and rates, but other lenders charge above average rates. The effect an interest rate has on your loan is extremely significant. So when you get a loan with a higher interest rate than others, it can be a huge setback financially in the long term. Don't always think your local bank will provide you the best deal for you, even though you've been there for the past 30 years. It's always best to get a number of quotes and check in with a few different types of lenders. Check the rates at your local bank, the online mortgage lenders, at credit unions, and maybe even use a mortgage broker. Number 7, don't make any big financial changes before the closing date. Say now you've signed purchase and sales and you have your pre-approval, and your loan is going through the very last stages of underwriting. At this point, it's really just a waiting game. The lender rechecks your employment status and also rechecks your financials. But just remember, nothing is official until you sign the final closing papers and the keys are actually in your hands. Things can always change. The last thing you want to do while you're waiting for a loan approval is to make any large purchases or any major financial changes, such as purchasing a car, opening up new lines of credit, changing careers, or increasing your credit card balances. Your pre-approval is never final until the actual loan funds are actually in your name and you have the keys in your hands. Before closing, the lender can rescind their approval if there are any large financial changes to your situation. Here are 3 best practices to follow before buying or purchasing your new home. Number 1, don't close out any accounts and credit cards. Keep any active revolving accounts open. Number 2, don't apply for any new credit card accounts. Number 3, try to pay down your credit card balances to 30% of your credit limits or less. And lastly, I guess this is number 4, you want to save as much cash as possible. When purchasing a home, you need to understand that the down payment isn't the only upfront cost of purchasing a home. You have to pay closing costs as well. You should also keep track of any large deposits to your bank account in the last 2 years. If you made any deposits to your checking or savings account that are not from an employer or a payroll company, the lender will ask for documentation or a letter claiming where they came from, and you must oblige. Hey guys, if there's anything in the world that you want to talk about or have a question, reach out anytime, no obligation, really. 508-821-8835. It can be about the weather, cars, real estate, racing, whatever. Hey, you made it to the end. To get your free quick video on the home buying process, look down in the video description and scroll all the way down to the very end. The link is right there. Now, if you like this video, then check out these at the top of your screen. And if you need a guy like me, I have a guy like me's info in the description below. As always, thank you for watching. I'll see you in the next one.